Mr. Powell, I'm going to project a picture up here so that the audience can see, but I'm also going to hold it up for you. Is this you, Mr. Powell?
That is.
Where are you?
That's a party after the alfalfa dinner, an after party that I went to.
Where was that party held?
It was at Jeff Bezos's home.
At Jeff Bezos's home, and when was it taken?
Excuse me?
When was this picture taken?
Saturday night after the alfalfa dinner.
Give or take, you'll stipulate end of January 2020?
Yes.
Recently. Can you imagine how attending a lavish party at Jeff Bezos's $23 million home, along with Jared and Ivanka and the CEO of JP Morgan Chase, Jamie Dimon, might give off the sense to the public that you are not, in fact, immune from external pressures?
I would certainly hope not.
What did you talk about at that party with them?
I didn't talk to any of the people you named.
You didn't talk to anybody?
I didn't talk to any of the people you named.
Oh, can you tell me who you did talk to?
I mainly escorted my son and his brand new wife in there, and I actually introduced them to General Mattis.
Okay, great. I would just suggest that this attendance at this kind of event with these kinds of people is inconsistent with what I would otherwise commend you on for doing a very good job, I think, of reaffirming to the public. This plants in the public's mind, I think, a seed that is counter to what you have been doing.
So Jerome Powell, head of the Federal Reserve, has really done it this time. The Federal Reserve just announced that the Bank Term Funding Program will cease making new loans as scheduled on March 11th. And in this video, we're going to be talking about the effect that this will have on the markets, and not only what this is going to do to the banks, but what this is going to do to the entire economy, the crypto market, what happened last time that caused the Bank Term Funding Program to go into effect when Silicon Valley Bank, collapsed, and then also some clips and some major news that's taking place for the future of CBDCs, how this is going to affect XRP, how this is going to affect Ripple, and what you can do to prepare. So comment 777 if you're feeling blessed. Comment 777 if you're feeling bullish, and let's run it. All right, bull runners, welcome back to the channel. So breaking news on the federalreserve.gov website. They just came out with this press release stating that the Bank Term Funding Program will cease making new loan payments as scheduled on March 11th. So the program will continue to make loans until that time and is available as an additional source of liquidity for eligible institutions. And during a period of stress last spring, the Bank Term Funding Program helped assure the stability of the banking system and provide support for the economy. Now, after March 11th, so there's some wiggle room here, banks and other depository institutions will continue to have ready access to the discount window to meet liquidity needs. And as the program ends, the interest rate applicable to the new Bank Term Funding Program loans has been adjusted such that the rate of new loans extended from now through program expiration will be no lower than the interest rate on reserve balances in effect on the day the loan is made. So basically what this means is they're rug pulling smaller banks. Now, one thing that's interesting here, guys, is the Fed's emergency Bank Term Funding Program liquidity injections were up to $7 billion this week. So Jerome Powell did the same bank injections prior to Jeff Bezos's lavish party in January of 2020. Then he pulled the rug. So ask yourself, why are they doing this exact same thing 4 years later while markets are rising? As you know, if you watched our previous videos, the banks have been consolidating, since banks have been founded, from the smaller regional banks to the larger banks like JP Morgan, Wells Fargo, Bank of America, etc. And so this Bank Term Funding Program was to provide liquidity to U.S. depository institutions. Each Federal Reserve bank around the United States would make advances to eligible borrowers taking as collateral certain types of securities. And so any U.S. federally insured depository institutions, banks, savings associations, or credit unions, or a U.S. branch or agency of a foreign bank that is eligible for primary credit is eligible to borrow under the program. And so for them to be, ending this, when you look at the Federal Reserve balance sheet, you see right here, guys, a critical thing happened back in March 10th. From March 10th all the way to March 22nd, they added to their balance sheet, erasing several months, 6 months worth of quantitative tightening, and then they went back to tightening again. And so what this caused in the markets was a massive run in the crypto markets I'm going to share with you in a little bit. But what ultimately caused this. We need to go down to the root, because when you see a wound on somebody, what do you do? You're going to stitch it up. You're not just going to wipe the blood off. You need to close the wound. And so the wound has not been closed yet. It's still open, in that they're just trying to hold the line by wiping the blood, and that's the federal funds effective rate. So with them raising the interest rates on how expensive it is for banks to borrow money from each other for overnight loans, well, that caused stress on the smaller banks. And as you guys know, when these smaller banks, when it's expensive to take out loans and borrow money from each other to meet liquidity needs, if people go to the bank and they start withdrawing money, or massive, VCs and massive companies that are using these banks tell their clients to go and start withdrawing money, then it doesn't help the problem. And that's exactly what happened with, Silicon Valley. That's exactly what happened with Credit Suisse. That's exactly what happened with these bank runs, where the Fed had to step in and they had to bail out the banks. And so the Bank Term Funding Program, was created, and the end of an emergency Federal Reserve funding program has eliminated what has been increasingly profitable arbitrage that banks were exploiting. Now, as you guys know, the larger banks made money from this. JP Morgan Chase gobbles up, Jamie Dimon gobbles up these smaller banks. And you can see, at comparable rates here, a chart from JP Morgan illustrates the arbitrage banks enjoyed when they borrowed from the Fed's facility and then parked reserves at the central bank. So as the Bank Term Funding Program rate has fallen below shorter term funding rates, the program has seen increased borrowing from banks, presumably due to the favorable of the terms, said Michael Feroli, who's JP Morgan's chief U.S. economist. And so banks will find a way to continue to make money from not only you guys, but what I'm going to be sharing with you towards the end of this video. And so the bank borrowing wave from the Fed has surged. You can see the size of billions of dollars, but it also means banks could borrow from the Bank Term Funding Program and deposit funds back at the Fed, earning a higher rate from the interest the central bank pays on reserve balances. So they were gaming the system, and the Fed just signaled the death warrant for mismanaged small and mid-sized banks all across the US. So there's 47 days left for this to hit. And when this was created, right on March 10th, Silicon Valley Bank failed after a bank run, marking the third largest bank failure in United States history and the largest since 2007-2008 financial crisis. It was one of 3 bank failures, along with Silvergate, Signature Bank, in March 2023 in the United States. And so when we look right here on the chart, we need to go to the chart and see what happened to see how this affect the market. So as you guys can see, the crypto total market cap, Bitcoin and all altcoins, dropped from about $1.1 trillion on 20th of February, all the way down to about $874 billion. And then the Silicon Bank collapse happened, and the subsequent 3 other banks collapsed, and we saw the market cap go all the way upwards of $1.26 trillion. So this caused a surge in the crypto markets, and the reason why this happened was because people did not trust the banks. Simple, right? They don't trust the banks. They don't trust fiat currency being debased. And so people flooded money, institutions and VCs flooded money over into the cryptocurrency market. And so, with the Fed raising the effective federal funds rate, obviously that put that constraint on the banks, but that didn't really put that big of a constraint on the crypto market, as we've seen the, bull run take place, back since December of 2022. All right, guys, the bull run started in November of 2022. So we've been in a bull run for, over a year. And so when the Federal Reserve starts lowering the effective federal funds rate, that's what we need to be wary of, because when they raise the rates, no crash is happening. When they pause the rates, the crash hasn't really happened. But when they start lowering rates, that's when it's going to get really sticky for banks. But then again, that could lead to massive bullish news for the crypto market. So we just need to look at the charts and then analyze multiple things so you can come to your own conclusion. Because in January 31st, in 6 days from right now, 97% are expecting them to hold the line, meaning they're not going to be lowering the effective federal funds rate. Then by March 20th of 2024, if we go here, we can see that 52% are expecting them to hold, 46% are expecting a rate lowering, and then by May of 2024, 51% are expecting them to start lowering the rates. And so something's got to give, something will break, and as you know, people love to either buy rumors or sell rumors, and then when the news actually hits, it's the opposite of what people think. For example, the ETFs, people were buying the rumors all the way up until the actual launch of the ETFs, and then they sold the news. And so what's happening right now with this sell-off is people are preparing for something to take place for the Federal Reserve lowering the effective federal funds rate this year. Bitcoin's having some type of black swan event. So there's rumors circling out there about some larger crash happening on the horizon. And so people are also taking profits. You know, you saw Grayscale, what's happening there with GBTC being locked up. People can now take profits on that. And so that's seeing a lot of sell pressure in the markets. And according to Trader Mercury, literally the same top signature every single time has been happening over the past 2 years. Really doesn't get much easier to comprehend than that when you look at this chart on the screen. And so a short-term temporary top for this phase in the bull run cycle, and we could potentially be forming a head and shoulders where you can see the left shoulder here on 9th of December 2023, the head for that rally on the 11th of January. And if we see a rally going into February, what could happen here is the RSI, you see this downward trending resistance right here, we could see the RSI turn around and rally upwards of 50 and then get rejected from this downward trending resistance and see continuation to the downside. So that would mean the price could potentially rally up to, you know, or the price of the market cap could potentially rally up to 1.6 trillion, anywhere between 1.6, 1.7, 1.5 to 1.7 trillion dollars, and then reverse from here and break the neckline at about 1.45 trillion dollars for the entire market cap as we come back to back test the resistance of the previous range as support, and then we continue to the upside. Now, if we look back from 2015 to 2016 for Bitcoin, we saw a rally up here, a sell-off, then consolidate sideways for about 200 plus days, and then we broke out from this resistance of about $470, formed a new high. Then we come back down to back test the previous resistance as support. We wicked off of it, and then we consolidated sideways for an extended period of time again. And then we broke out from this high, and it took about 180 plus days, almost 190 days. So for Bitcoin to do something different, or the crypto total market cap to do something different this time, is foolish thinking. It's more than likely going to do something similar. So what I would expect to happen, how this relates to, you know, what the Federal Reserve is doing, is for us to just continue to the downside. We could potentially see short-term relief rallies going into April, but ultimately we could wick all the way back down to $1.2 trillion, and then something to break within the banks, and for us to come back out of here and to rally back out of here and then consolidate sideways, you know, towards the tail end of 2024, and then we work our way out of here. I would expect something like this to take place, and this would be a healthy correction. So could there be another banking collapse that happens down here back at the previous range, which was resistance back in April of 2017, July of 2023, for us to see a sell-off going into that? Very similar. If I zoom in here on the left-hand side, the chart, well, sure, the collapse of Silicon Valley Bank was good for crypto, bad for the banking industry, but we saw a sell-off going into that of 20%. And so could we see a sell-off going into something happening in the banking world to collapse the market, and for us just to repeat what happened during the last bull run cycle prior to 2017. So during this 2016 to 2017 cycle, even back in 2019, it kind of confused people because it combined, you know, phase 1 and phase 2 of the bull with COVID, this black swan event right here. You know, this was completely out of the ordinary. So, you know, for that to happen again, you just have to prepare for that. It could happen, you know, but most likely case scenario, guys, is we come back down to back test the previous resistance as support, and then we consolidate for 6 to 12 months. And then for something to break in the banks, and then for them to usher in CBDCs. Now, listen to this, because this is what they're planning, and the technology that they're planning on using behind the scenes. All roads lead to the XRP ledger.
Like Switzerland and China all testing out the digital currencies. How are you gearing up for the disruption of money with central bank digital currencies? How will it change the way you and other banks operate in future?
Probably fundamentally. While we're not formally involved, no foreign banks are involved in the Chinese ECNY. I think we're as close to that as we can be to understand how that digital currency can be used for cross-border trade. Going back 5 years, we had digital currency underpinned trade finance and money settlement systems, and using it as a medium of exchange, using things like Ripple's XRP, for example, as a medium to affect real-time cross-border payments.
So using Ripple's XRP for cross-border payments. Now, what they also want to do is they also want to be able to track where you spend your money, what you eat, where you go, who you're speaking to, basically everything in your life, having total control and surveillance over your money.
We're developing through technology, an ability for consumers to measure their own carbon footprint. What does that mean? That's where are they traveling? How are they traveling? What are they eating? What are they consuming on the platform? So individual carbon footprint tracker. Stay tuned. We don't have it operational yet, but this is something that we're working on.
So basically, social credit score to lower your carbon footprint for the climate scam that they're running to make more money. So Christine Lagarde, president of the European Central Bank, if you pay more than $1,000 in cash, you're on the gray market. If you get caught, you get fined or you'll go to jail. So they're telling you that you're a criminal if you spend over $1,000 in cash. This is the most ridiculous thing I have ever heard in my life. These people should be locked up. Listen to this.
Electronic euro, as I know.
Yeah.
So
Yeah.
how can switching to an electronic currency help?
Now we have in Europe this threshold above 1,000 euros, you cannot pay cash. If you do, you are on the gray market. You take your risk. You get caught, you are fined, or you go in jail. But you know, the digital euro is going to have a limited amount of control. There will be control. You're right. You're completely right. We are considering whether for very small amounts, you know, anything that is around 300, 400 euros, we could have a mechanism where there is zero control. But that could be dangerous. The terrorist attacks on France back 10 years ago were entirely financed by those very small anonymous credit cards that you can recharge in total anonymity.
So this is absolutely ridiculous. They've been using the terrorist excuse for a lot of different stuff. Oh yeah, it's the terrorist's fault. Just always blame the terrorist. 9/11, blame the terrorist. It's the terrorist's fault. This wouldn't happen if this didn't take place because of the terrorist. That's all they're doing, when it's just corruption at the highest degree at the top. And so we just have to know what their next move is. And with their next move being total control, like George Orwell's, book, talking about ushering in, social credit score, like what's happening in China. If you think it's not making its way here, you're mistaken. So the best thing to do is to focus on how to generate wealth and what to do with your money. Because if the market's going to go down, what do? Well, obviously, we're going to help you guys prepare for that with our financial education platform on bullrunners.com, but studying the charts, looking at the charts, because look at the liquidation heat map. So up here, there's $271 million, upwards of $42,000. And so if we were to see a rally in the short term to form something like a right shoulder up here, well, then we could see a surge going into February for the crypto market. But don't get trapped, because this could be a trap right up here if we see this rally, because I would expect a continuation to the downside. And so on the macro scale, if you're holding for the long term, you'll be fine, but you need to know which projects make sense to hold. Now listen to David Schwartz right here about Medico and HSBC for digital asset tokenization of gold and tokenization of securities.
News of Ripple's acquisition of Medico last year and then partnering with HSBC. What can you tell us there? And is HSBC going to be using RippleNet or the XRP ledger in any way?
That has been, that was so exciting. We knew we needed some sort of a custody solution. Trying to find Ripple, trying to be like a sort of one-stop shop for institutional adoption of crypto, and trying to provide a platform that would provide access to the XRP ledger, to tokenization, to payments, particularly. Like there had to be a secure custody solution in there somewhere. And so we were we looked at many different companies, and then in May we acquired Medico. It was a huge acquisition, $250 million, Ripple's largest acquisition ever, and obviously it was a fantastic. It was kind of funny because when you first do an acquisition, you're not exactly sitting on the same side of the table as the company that you're acquiring, and everybody's afraid to say something that will blow up the deal. Like if somebody has I had this crazy idea of something to do, like that's a terrible idea. Let's not acquire. Everybody's on pins and needles that they're not going to blow up the deal. And I remember our first meetings after the deal was closed, when we were all sitting on the same side of the table. And I really have to say we found a bunch of kindred spirits. I mean, they've just been an amazing group of people to work with. The technology they've built is incredible. Custody is a massive market, something like $10 trillion by 2030. And, the increases in tokenization, mean that that's just going to grow. And institutions are going to be like the main drivers. So you need, some place to store it. If there's CBDCs, if there's stable coins, if those things become big as we think they will, people are going to need places to store them. They're going to need connections to on-ramps and off-ramps, payments, liquidity services. It's kind of all going to tie in. It's kind of like the same thing that banks learn. In the early days of Ripple, another thing I learned talking to banks is that a lot of banks don't care about payments. Seriously, like you might think, well, what do banks do? What they say is, we want you to deposit your money with us and sort of leave it here. And payments are expensive and they're slow and customers complain when we can't do them. So we just won't be very good at payments. We'll be a great bank, but not very good at payments. And what they learned very quickly is that why would I keep my money at a bank that isn't good at payments? And what they discovered is that if I don't keep my money at a bank, I'm not going to go to the bank for a loan. It used to be if you needed a loan, you would go to your local bank that you had a personal relationship with. Virtually nobody does that anymore.
Right.
Right? Like, the world has changed. And I think the same thing happens with custody. Like, if you want to get all of these associated businesses, you're going to go to the place that has your cryptocurrency. You're going to look for their liquidity services, their payment services, their connectivity to on-ramps and off-ramps. That's going to be the first place that you're going to look. And so by adding custody, that's going to make Ripple the leading enterprise solution provider in the space. So, I'm just so super excited about that. HSBC, they plan to offer a custody service for digital assets to their clients. So it's kind of like a layering service where HSBC is using some technology for custody, and that sort of makes them able to provide a sort of relay custody service to their clients. What's great about that is HSBC can do the sort of compliance part for them. So if I keep my money at a bank, I'm almost completely reliant on the bank's compliance to make sure that I don't fund terrorists or I don't receive money from, I don't have to have my own compliance department have a bank account, because my bank account is at an institution that has all those things. Now with cryptocurrencies, many people will self-custody and I'm just not worried about all that stuff. They don't have to have a compliance department because they don't have a regulatory burden. But if you're an institution that has a regulatory burden, it doesn't make sense for every institution that wants to hold cryptocurrency to have its own cryptocurrency compliance department. That's obviously they're going to have something because they have to monitor, but to actually build out all of those services doesn't make sense. So layering is just a very logical way to do that. And they're looking at things like digital asset insurance. They're looking at tokenized commodities like gold. So I think those are tokenized securities. HSBC is extremely interested in those types of projects. Their Orion project, which was a tokenized gold. So it's extremely exciting. It's strategically important to Ripple, and I think we're still in the process of processing exactly how the strategic, Ripple had strategies that they were working on that required custody. But Medico has so much more than they have those things of layered services with compliance. They have this possibility for a tokenization platform, this integrating it with payments and liquidity. And I think we're still thinking through exactly, we know what Ripple brings to the table. We know what Medico brings to the table. Obviously, the two of them together is great. But then what's the extra? What's the synergy that you get? I think we're still in the process of figuring out how we can adjust Ripple's strategy and Medico's strategy to take advantage of what the other can provide. It's going to be interesting to see. I wish I could talk about some of those ideas because they're great, but very little's finalized yet. So that's something. And again, we couldn't really do that until us and Medico were on the same side of the table.
Sure.
And we're totally willing to give the crazy ideas and the bad ideas as well as the good ones without having to worry about blowing up, $250 million deal.
So what do you think is going to happen with the Federal Reserve closing the bank term funding program? What are these banks going to do for liquidity needs? Well, could they turn to Ripple's on-demand liquidity services? And could they turn to crypto? Could banks look more towards these blockchain companies and try and figure out how they can get out of the traditional system? Or is that already what's happening right now? Well, look at this. This is what's interesting, guys. Because a lot of people have been hating on XRP, saying it's been underperforming the rest of the market. And, well, that might be true for certain meme coins like Bonk or Solana or other projects. That's why you follow the key fundamentals of investing that we've been talking about on this channel, which is diversification is one of the biggest ones. Never investing more than you can afford to lose, because people that put their eggs in one basket end up getting screwed. But when you diversify, You're gonna have other projects that grow a lot quicker than others. So if you put everything that you had in XRP and you're blaming other people for that, that's your own problem, man. You know, that's the biggest mistake that the average investor makes. And so you want to be an above average investor. You want to be an intelligent investor, which I know you guys are. As always, not financial advice. We're never going to tell you to buy XRP or sell XRP. We're just bringing you the news, and what you choose to do is up to you. We do talk about other projects on bullrunners.com that you can go check out before we make videos about them. But look at this. Edward Freina posted this. U.S. gold reserves and Fort Knox. And so Fort Knox is a notable United States Army installation located in Kentucky. Recently, Fort Knox welcomed a civilian delegation for the first time in over 40 years, publicly acknowledging the possession of $186 billion worth of gold. So it's widely speculated that Fort Knox houses a significant portion of the entire U.S. Gold reserve. So the Genesis block 132570, in June of 2012, the XRP ledger had gone live and was actively processing transactions. Notably, the XRP ledger, being at its early stages in the first week of operation, had some bugs, right, that warranted occasional inconsistent fixes, or at least that is the official version from Ripple. As a result, the ledger sequence was reset multiple times, leading to the deletion of transaction history. The XRP ledger version that we know today began in December of 2012. The first week's worth of data completely disappeared, which was ledgers 1 through 32570. They're non-existent. And there's a total of 136 Genesis wallets. Having a closer look at the largest one, there's an outstanding wallet that holds 6 billion XRP, and this wallet is x.fortknox.b. Tracking down these transactions, it is clear that XRP held there was sent directly from Ripple. Now, having another look at the Genesis wallet, another surprise in wallet x.distributor.1 that held 80% of the total supply when tracking down transactions in the 26th of January of 2013, 9 transactions distributed almost the entire supply in different wallets. If we look into the details, they're once again described as Fort Knox, right? Fort Knox 2, Fort Knox 3, Fort Knox 4. And if you guys watched previous videos on the channel, clips that we played of Rosie Rios, who was a former U.S. Treasurer of the United States who signed the $100 bill, she was also added to the board of Ripple as a board of directors. Rosie Rios has direct oversight over the gold reserves at Fort Knox. So could Ripple have sent that to, wallets that she controls and she manages, and they're working on backing XRP to gold when they're ready to usher this in? So people that are impatient right now, that are just holding XRP expecting to get rich overnight, guys, this is a long-term project. I'm holding XRP through 2030, so for the next 7 years. I'm not holding this to make money tomorrow. Sure, there are projects that I do hold in my portfolio that have done very, very well and are absolutely crushed. They've absolutely crushed it over the past 12 months. Some of them we've talked about on this channel, and a lot of them we're going to be talking about on bullrunners.com, guys. Go to this right now. You're going to discover our top altcoin picks first before we make videos about them. You're going to get early bird access to our financial education platform. So for those of you that are bullish on XRP and want to see what else we're bullish on moving forward for the rest of this bull run, there's going to be certain categories and narratives that are going to absolutely crush it within gaming, artificial intelligence, real world assets, and other categories like layer ones that we're going to be discussing in future videos. So if you want to see more content like this, make sure you like this video, subscribe to the channel, share this with a friend, and go to bullrunners.com, click the big button on the page, put in your best email address, and subscribe to our daily newsletter, because we give you the best information to help you prepare for the worst that's yet to come in this economy. Because together, you know what we're doing? We're backing up our truck all the way to the bank, beep, 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 boom, backing it into the bank, grabbing the bags, packing them and stacking them, leaving no bags left behind, because the spending power of the dollar is going down. The Federal Reserve is ending the bank term funding program. Blockchain technology, distributed ledger technology, and cryptocurrencies are going up in interest. That's the truth. And together, you know where we're going. We're going camping on the beaches of the moon. I'll see you guys on the next video. I'll see you on bullrunners.com. As always, stay bullish.